Hi, I'm going to have a little look at a strategy today. So let's roll the intro. I'll tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and as you can probably see by my desk, I am the Scruffy Trader. And what I'm trying to do is put trading in the real world. And today I'm going to answer a couple of emails because they're constantly looking for freebies and strategies, and I'm constantly looking for
a coffee.
A coffee. You can say hello, put your head in. See this? My Miller girl. Keep the Wolf of Wall Street. I haven't got the Lamborghini and I haven't got the Ferrari.
You ding dong!
Oh, make it stop!
But I do have the Miller girl, so that'll do me. And a coffee. Because we all know Scruffy likes a coffee. But he loves them charts as well. And he really does. You see, the charts to me fascinate me. And that's why I enjoy it every day. And every day is a challenge. As is some of the emails that I get. They really are a challenge. But the way I look at it now, few of you find me on my Telegram, which is private by the way, but I still get bombarded. I just ignore them now. Kind of done with the trolls. Hurl as much as you like. I just don't respond anymore, whereas I used to, which is probably what fed them. But there's some wonderful guys out there, and they send me some great messages and they reach out. And the one thing that I get over and over is, show me a strategy. Show me how you do it. Well, I can't exactly show you how I do it. And I wouldn't anyway. I mean, my education costs a fortune and I'm just not going to give that away. But I will give you tidbits to inspire you in your own education. And that's what this is all about. And if you don't like that, then that's no skin off my nose, because I'm not a teacher. You know, I'm here for enjoyment, not just to give away things free. You know, and if you're in this world for a freebie, go get a job. And it's as simple as that. But if you're here because you want to learn and you're interested in trading, then by all means subscribe and drop a comment below and we'll explore it all together. And the reason I say things like that is very simple. I have no ulterior motives. You know, I don't care whether you're here or not. I do this for enjoyment. So, sorry, almost on a rant, because they have been out this weekend again. And personally, the trolleys can suck it. So there we go. So what I'm going to do is, I'm going to jump on the screen and I'm going to show you a basic scalping strategy. I don't condone scalping, by the way, guys. It's fun. Do it once in a while. But do not think it's the road to riches, because it's not. It's a hard game to play. Okay? But I'll show you this strategy and we'll see how we get on. Okay, guys. So here we are, just on a basic broker. Now, before we start, if you looked at the last scalping strategy that I did, I had a little mantra in it, and it was score, score, stop. Now, that mantra applies to every scalping strategy, because one of the bad habits of scalping is over trading, and you have a tendency to get your 5 pips, brilliant, and then you want another 5 and another 5. But eventually you're going to hit the moment where the market turns, because the markets will wave and you're just trying to catch those little waves. But time is not your friend when you're scalping. Patience is your friend. Okay, so what you want to do, score, score, stop, take a break, reevaluate the chart, then do it again, because otherwise you'll overtrade and you'll catch the moment where the market turns. All right, so just a little bit of friendly warnings to stop you from blowing your account by just being too aggressive. Okay, so let's have a look. When you're scalping, you want to be in a very fluid market. And that means you're looking at oil, you're looking at DAX, you're looking at one of the big four Forex pairs, something sort of like the euro dollar, pound versus dollar cable, USJPY, or the Aussie USD. Out of the four, the better is probably the pound dollar and the euro dollar. I pick them mainly because they're the most liquid and they're the most traded markets. Then you, like I say, you can look at the DAX and you can look at oil and whatever as well. The trouble with the DAX and oil, if you're a beginner, is they are lethal markets, because when they move and they can spin on a dime. Okay, so just be careful with the markets. Oh, talking of careful, is that for me?
It is.
You're looking very pretty today.
Sunshine.
The sun's shining. Does that mean the moon's coming out there? Sorry, almost got X-rated there. She is my best friend. Anyway, and she's giving me another coffee, so it's not bad actually. 2 in 1 day. I think she wants something, and it ain't me. Are the shops back open? There must be. Right, better make some money then. For the purpose of today, we're looking at cable, which is the pound versus the dollar. Okay, and what we'll do is we'll just quickly break it down. So all you need for this strategy is 3 moving averages. Okay, I use a 21. Okay, so there's no mystical value as to why it's 21. Some people use a 20. I just use a 21 because it's a Fibonacci number, and I often use Fibonacci numbers for midterm moving averages. So I use a 21, I use a 34. But the 21 in this case is very good. And the idea is, if the price is above the moving average, you are long only. If it is below, you are looking for short one. So what we'll do is I'll draw a nice big thick line there, just so I can see that it is short when I drop it onto the next screen. And you can see it broke there. So this is the section of chart that I'm looking to show you. Okay, and then after that it is long. So it broke it there. All right, so the first line, 29th of June, so it's relevant charts, these is this week. And we'll just do a couple of trades and I'll show you the basics, and then you can test it on your own charts. All right, so where's this at? That's 7 o'clock in the morning on the 29th. So if I drop it onto a 5-minute, bear with me while I find the 29th. There's my little line. Okay. So once you've come down away from your anchor chart, and that's what you call the 1 hour, the anchor, because that's what you're basing your trades off. This one is going to be short only. Okay. So we get rid of the 21 and we replace it with a 14. Okay. Let's put that in black. And you want an 8. Okay, I like them blue. And what you're looking for is for the 8 to now be below the 14. So that tells you the 5-minute is now in line with your anchor chart, the 1 hour. And that happened here. Okay, you can see it nice and clearly. The 2 lines parted. And you're looking for them to separate, which they are. The next part of this is you now need to find an entry point, because you can't just trade blind. Okay. And it's the first touch or retest of the 8. Now, it can either pierce it, touch it, but it must close below the the 8 if you're going short, and vice versa if you're going long. So there you are, it's come up, it's touched, so you don't do anything just yet. You wait for the close below that 8 period moving average. So that is here, all right? So that is your entry candle. But that's not quite where you enter. See, most people go, right, it's below, off we go. Not quite as simple as that. Count back 5 candles. Okay, so it's 1, 2, 3, 4, 5. This candle here is your entry point. I'll just draw a little line on it, okay, which is there. I'll just make it solid. And we'll make it blue. All right. So this blue line is your entry. And I know you scratch your head and go, oh, why? Well, what you're trying to do is you're trying to find momentum within the market, but you're also trying to find a point where it's been lowest below, and you want to break that low or break a high if you're going long. Now, over the last 5 candles, it gives you an idea of whether the market's moving down or not. Okay, so it's come down, it's tested that area, it's moved up, retested the moving average, and then you're looking for the pulse pushing down. And it'll stop you getting in too early. Because if that was the lowest point and this thing is starting to move the other way, it won't take you into the trade, it'll just leave you behind and keep you safe. That's the idea. All right, so we know that's the lowest point. So you place your order just a tick or so below that candle. All right, and your stop is the opposite. It's the highest of the 5 candles. So 1, 2, 3, 4, 5. That green one there was the highest. So if I put a little line in there, and we'll just make that one red so it stands out, you now have a defined target range. So you just get your little measuring tool. That's it there. That's 13 pips. Now you're looking for 10. All right. So this is doable. All right. So you put it down to there. Okay. The little dotted line is your target. Oops. Sorry. There. That's your target. All right. Easily did it. All right. Didn't even look at the stop. So what would have happened is it came down, it's retested, you put your order in, and then wallop, it's dragged you straight into the trade, and you are looking for an initial 10 pips, 5 if you've been conservative. But as soon as it hits your 10 pips, you pull this into break even, and you take half of your trade off, and there is your full target. And I have a tendency to do 1.5. So that would be here. All right, that would be my target. You know, but there's many ways. You can trail your stop as well. You can go to break even, so it's here, and then you can just run your stop behind this 14. Each candle, just keep moving it down, moving it down, moving it down, till eventually you stop down. But your initial start of the trade, you want to be a break even at 10 pips, and you want to take half your trade off at 10 pips. And then regardless of what happens after this point, you have been paid, you are risk free, and if it keeps on moving, it gives you the cream. Another way is you can just go, right, okay, I am targeting 1.5 times your risk target, and I'm just going to pull it to break even as soon as it hits 10 pips. Hits 10 pips, and then I'm just going to see if it hits 1.5 and then forget it. So nice and easy, but you're being stopped out down here somewhere. But if you were doing it another way and you were looking for just 5 pips, you'd have easily hit 5 pips straight away. this would have been your second trade down here. Okay, this one here. So again, where you stop out is your new entry point. 1, 2, 3, 4, 5. Your target is up there. So that's that. That's the lowest of there. So you're risking about 15. There you go. And you'd have easily struck that one as well. All right, nice and simple. And I hope you can kind of see the idea behind this. It's a very, very simple strategy. Just move these out the way because it's come back up here because this is an interesting area. There's a lot of indecision around this area. So the market has come up, smashed through that lot. So you're thinking, oh, market's turning. Comes down, retests under. So you wait. There's your pierce. That one there is your new candle. Okay. And the reason behind that is that could go anywhere. That is the first close below the moving average. So you're looking for a retest, which is that one there. Didn't close above the 14, so we know it's still downwards. That candle closed below, which tells us it's the new area to enter. So we will come back down. So it's 1, 2, 3, 4, 5, which is there. That is your designated range. Pretty much the same, 15 pips. Drop that down onto there, pull that line onto there so we can see where we need to get out. There we are. Didn't go near the stop, and you are done again. Simple stuff. All right. So it's a dead simple strategy to use. But there you go. So I'm going to enjoy the coffee. I'm going to enjoy Sunday afternoon because my grandkids are coming across this afternoon. Sunday, so I'll be watching Star Wars.
Hello.
Sorry, had to do it. And that's it. So next week, back to the day job. Done the challenges, etc. All completed. And they were a good exercise. I enjoyed it. And it was good to be out of your comfort zone a little bit. But I'm going back into the normal day job tomorrow. So remember, guys, do what you love. Money will follow. See you all in the next one.